Let's first start with the incremental changes in product. I think it would be good to have a less expensive iPhone and a new, grander, more expensive iPhone. But I do remember in the old days when Steve Jobs was running the company, or when he came back to the company in the late 1990s, and what they had done is they had milked the Macintosh product line. So they had 6 different variations, and then they had X's and XS's and XRs and whatever. And he said, that's ridiculous, it's hard to know what to buy. And he insisted that they simplify their product line and then innovate in other lines, such as the iPod and eventually the iPhone. I think that at some point, sort of divvying up the iPhone product line is a good strategy for the time being, but it'd be nice to have a truly innovative product, and that would transform the company more than arguments about the China tariff issue.
Casey, it seems to me that this is a really significantly different iPhone era that we're in now. I mean, it's a portfolio approach as opposed to Apple focusing on trying to get people to buy the most expensive phone and then just sort of making older versions more available. How do you think either Apple will define this new era of the iPhone and kind of what it means and how it's trying to put it out there, or how we should define it, even if Apple doesn't?
Well, I think they're going to make the case that they're bringing their innovations to as many people as possible, while at the same time trying to make sure that they can sell a really, really expensive phone, right? I mean, this year we're expecting to see a phone that's going to start at $1,200, and a lot of us are still getting used to the idea of spending $1,000 on a phone. But what we've seen over the past year is that people are absolutely willing to spend that much on a phone. Apple's customers just aren't that sensitive to price, and it knows that if it wants to grow, it's going to have to find more customers, and of course that means making a portfolio.
Walter, why do you think it's important to have a lower price phone?
Well, I think Casey hit the nail on the head. You want a portfolio if you're going to do that. Certainly a $1,200 phone, if that's what one of the ones tomorrow will be, will get you the revenue for the high end. But there are a lot of people out there, and frankly, people like myself, who say, okay, my major desire in life is not the most expensive phone possible. I just want something that works really well and is really cool and is Apple. And so I think that ignoring a larger and broader market could be bad, and open Apple up to a more Samsung-like competition.
Casey, what about the ecosystem? Apple is well known at these events for bringing on partners, whether it's Adobe or Zynga or EA, all across the spectrum, gaming companies tending to factor in, but Netflix has been on stage with them. There's been some pushback on the toll that Apple's and others charge for access to their app stores. Apple's made some adjustments on that front. Do you expect Apple to either make another adjustment or perhaps another enticement to try to lock those third-party developers into the platform further?
I would be somewhat surprised if they made an announcement like that tomorrow, for the simple reason that they're doing just fine, right? Many of these businesses, can't exist without Apple, and from Apple's perspective, a 30% tax on the revenue they're making is sort of in line with what they think is fair. So while I'm sure there are a lot of app developers out there who would love to find ways to make more money, I don't think Apple is going to make that change. Now, what I do think you're going to see is Apple continuing to push app developers into more subscription-oriented models. We're probably maybe 2 years into this transition, but until very recently, most of the paid apps in the App Store were one-time purchases, and increasingly you're seeing everything from media apps like Netflix and Spotify to just sort of like simple productivity apps charging, $3, $4, or $5 a month, and I think that's going to continue.
Interesting. You're gonna go out there, right, John? You'll be joining us from.
I'll be flying out tonight.
Yeah, we can't wait. It's always an exciting day. The other big story, guys, in tech is Nomura downgrading Tesla from buy to neutral, and they do cite the behavior of Elon Musk. They say the stock is, quote, no longer investable due to his behavior. Musk most recently appeared on comedian Joe Rogan's podcast, appeared to drink whiskey and smoke marijuana. The video caused some concern among some who have already questioned his leadership of the company. And in fact, guys, in the downgrade, Nomura talks about number of tweets per day increasing to 15 from May, and they say his behavior is well documented, likely contributed to the onslaught of executive departures in recent months. Walter, for a sell-side analyst, is this going over your skis or not?
This is pretty bad. I think what it really shows is that the board of directors of that company is not in control. It's also an indication that it's not a great idea to have somebody like Elon Musk, a founder, to be both the chairman of the board and the CEO. The board needs to step in at some point and rein in the CEO, and if I were an investor, I wouldn't just be looking at Elon Musk, I'd be looking at changing that board. To get back to Apple, as you know quite well, in 1985, Apple had that problem with Steve Jobs, that he seemed to not be executing in a crisp manner, producing the return they needed. And the board ended up not being able to get to a middle ground, and they ended up firing Steve Jobs. That was a mistake. I think if you eject Elon Musk totally from Tesla, that would be a mistake. But what you do need is a strong independent board with an independent chairman of the board so that there can be some governance disciplines on this company.
Casey, you know over at The Verge how ardent the fans of Tesla are and how closely the brand of Tesla is tied to Elon Musk. So what are the options here? He is seen as being the chief innovator, the chief visionary, the chief architect. He's the one whose face we see every time they have an announcement. How much can they separate themselves from Elon Musk's antics, positive or negative?
I don't think they can. I think Walter is right, but there are a clear number of steps they can take. Number one, step away from Twitter. I would invest in any company where the CEO is tweeting more than 15 times a day, right? Their attention should be elsewhere. Similarly, right, to me, the question isn't, should you go drink whiskey or smoke weed on a podcast? It's what are you doing on that podcast to begin with, right? We all know how behind Tesla is on auto manufacturing, and while I'm not saying Elon has to devote 24 hours a day to it, it just sends a signal that his attention is elsewhere. So I agree with Walter. They need stronger board oversight. They just need to rein in the CEO, try to get his attention back on making the products, and maybe don't talk for a while. We're in this weird zone right now where tech CEOs are spending all day talking to journalists and entertainers, and maybe they should just go back and work on the many, many problems that are ahead of them.